Good morning, guys. Tony here. Welcome back. Unfortunately, not a great morning for Mullen investors. And I just want to start out by saying I do not understand for the life of me the people that have been pumping this company on Twitter over the past couple weeks with ridiculous price targets, telling people to buy call options. It's going to the moon. Guys, this company has been under the knife, facing a potential delisting. They have production getting ready to come out. Yes, that is true. But even if they get vehicles produced and delivered, they're still going to incur losses for the foreseeable future. Let's go through the new SEC document, talk about the Nasdaq hearing and the new disclosure on shares outstanding. I want to start off by saying I have no position in Mullen. I'm not short on Mullen. I have no options on Mullen. I'm just a realist who looks at financial statements and SEC filings and tries to give you guys an unbiased opinion because there is way too much damn pumping and chart reading going on that is not grounded in reality. Mullen opened down about 25% this morning based on news of the upcoming vote in December to effect a reverse split. It has recovered a bit since the market open, currently down 19.5%, trading at 27 cents. If you are a shareholder of Mullen, you are unfortunately aware there have been two recent reverse splits on the stock already, and the company still has not been able to maintain the $1 minimum bid required to stay listed on Nasdaq. There is a hearing pending with the Nasdaq hearing board to see if the company can get some sort of exemption. And we don't have an exact answer on that, but my guess would be that the hearing board is not going to approve that. I know a lot of people have hopes pinned on the lawsuit, but that lawsuit is going to take years. And I think that the Nasdaq hearing board is not going to give that any weight. The company, in light of probably thinking the same thing, preemptively went ahead and filed a SEC notice today, special meeting of stockholders for December 15th, 2023, to consider a proposal to approve another reverse split to get above that $1 minimum bid between a ratio of 1:2 to 1:100. As we know right now, the shares outstanding on Mullen, you can see here where my cursor is in the bottom right, 184 million shares. And there has been a lot of debate back and forth on social media. Was the company still undergoing dilution? Were there warrants being exercised? Could that be why the price is going down? And the answer is yes, there has been dilution going on. We have noticed here in the proxy statement that the shares outstanding is now 287 million shares. That is a 53% increase from the last time we got an official share count from the company. We do know that there are some shorts in Mullen. If you've looked at Ortex or any of the other sites, the estimated short interest is showing just over 20%. But I do want to remind you guys that these data sites don't have the correct outstanding shares of 287 million. So the reality is the short interest on Mullen is only about 12.5%. There have unfortunately been, especially on Twitter, a lot of people looking at the chart and telling you guys that it was about to go up to $1 or $10 or $20. I don't know how they can ignore the fact that this company has been under the threat of potential delisting, the fear of dilution, which was not just a fear, it was a reality. And even though Mullen will have some production and deliveries in this quarter, maybe next quarter and next year, the reality is they're going to be facing losses for the foreseeable future. That is just part of starting up an automobile manufacturing company. I want to encourage you guys, as always, to read and understand the financial statements and don't minimize the impact of companies that have no revenue. Don't minimize the impact of companies that have negative earnings, losses. You can't just look at a chart or scream about synthetic shares and outrun those type of facts on the financial statements. When a company is faced with potential delisting, when a company is actively diluting shareholders, and when a company has losses on the income statement with a long forecast for more losses, it's not worth your time listening to people who are talking about synthetic shares, fake shares, manipulation. The problems have to do with the company itself. The problems always start on the income statement and the balance sheet. Evolve your thinking, step away from the clickbait, and you will become a smarter trader. I am Tony Denaro. I want to thank you for watching, and I will see ya on the next video.